Hi everyone, Jonathan Wu here from SWU Openinvest with our June 2023 portfolio updates. So after a strong rebound in Q1 2023, China's recovery has slowed due to a lack of stimulus from the government. That being said, the valuations remain very attractive for Chinese equities. Based on historical data, Chinese equity market performance actually gathers strength between the third and the fifth plenum meetings, which is actually set to occur in Q4 this year. So it's really a matter of patience and investing based on fundamentals. Even though Australia took a pause in raising rates in July, it is still widely expected that further rate rises are to come as the RBA seeks to bring down inflation to its long-term target of 2 to 3% by late 2025. The committee continues to look closely at consumer spending, as is the RBA, and when that actually tips over, we will clearly see ripple effects to corporate earnings as well as an uptick in unemployment. On the back of this, one area of potential risk in investor portfolios is commercial property. Given the increased levels of working from home, as well as increased online retail activity. Historically, the listed market moves faster than the unlisted market, as you can see here. So investors really need to consider and prioritize quality over growth in the current environment. Tighter lending standards also remain a headwind for growth as corporates are unwilling to invest further given the uncertain backdrop economically. The committee expects volatility to remain reasonably high given the uncertainty over the global battle for inflation. Investors should be prepared to expect longer-term interest rates to remain higher, and rate drops won't occur for a while. If we consider Australia, we are probably likely to see interest rates actually probably fall in the latter part of 2024. We also expect, much like the first half of 2023, the second half will continue to be a test of patience for investors as markets eagerly await confirmation of recession in major economies, including the US as well as Australia. In saying this, a well-diversified portfolio of global equities and fixed interest actually outperformed cash in the first half of 2023, and we expect it to continue to do so for the remainder of the year. The income booster portfolio for the month of May 2023 was flat. It was 0%. Over 3 months, it was down 0.14%, and over 6 months, it was up 3.19%. Now remember, this portfolio is primarily being driven by income portfolios, which is derived from both dividends from shares, private credit markets, alternative credit, and bonds. And this portfolio has and retains a target of the RBA cash rate plus around 3%. As we try to achieve that target, one of the things that we're currently reviewing and have made a decision to sell is Australian government bonds isn't providing the risk-return profile that we are looking for longer term for our investors to achieve that RBA plus 300 basis points target. And therefore, the investment committee has decided to switch the Vanguard Australian Fixed Interest Fund exposure to Fort Lake Real Higher Income Fund to overall boost the portfolio income to get closer to that level. Vanguard in itself is actually paying less than cash and term deposits are actually getting closer to that high fours, even sometimes special rates are getting to around 5%. So the investment committee is very cognizant of this and therefore has brought the portfolio income return to over 6.5%.